So good evening, everyone. Welcome to June 2022 webinar. Thank you all for joining. I hope everyone is safe and sound in this COVID pandemic. I'm Shweta from Habal Technologies, and my team member Vibla and I are going to be your moderator and host for today's session. The number of SMEs in India is about 42.5 million registered and unregistered together. That means a staggering 95% of the in total industrial units in the country. Now you have realized how important this sector is. Recently, we have seen a rise in digital lending in SME sector, and we are glad to have experts here to impart us with knowledge on this topic today. Before moving, I would like to remind a few housekeeping points for the audience. The webinar is live and recorded. Please make sure to connect your audio properly. The session is going to be approximately 1 hour. We invite comments and attendees from the comments and questions from the attendees. Please post a question in the chat box. We will hold it in discussion at the end of the session during the Q&A. And we will also be uploading this webinar video on YouTube. During the end of the session, we will share a feedback form. Please provide your responses to it. Now, let us move in introducing our guest speaker, Mr. Sharad Agarwal. He is the CEO of Rapidmoney, the digital lending arm of Rapidpay Fintech Private Limited. He has about 2 decades of versatile experience in setting up fintech startups, business development, digital technology, operations, customer services, finance, program management in banking, financial service, and industrial insurance sector. He's proficient in setting up businesses and managing end-to-end operating infrastructure of various BFSI organizations, including people, process, and technology. Next, we have Mr. Mani Parthasarathy. Let me introduce him. He's the co-founder of CloudBankin, which is a tech-fin company that provides technological solution to various financial institutions like NBFCs, MFIs, and fintechs across 9 countries, and provides a complete end-to-end digital lending solution from origination to recovery. Any institution can use CloudBankin to launch their lending operations in less than 24 hours. Our clients are able to disburse loans to their borrowers in less than 10 minutes. He has expertise in the IT industry for more than 15 years, and he has interviewed over 50 plus experts in this industry. Now, I would like to hand over the session to Mani.
Hey, thanks, Shweta. It was a very fast introduction for both the companies. Thank you for that.
Thank you.
Yeah. So Sharad, by the way, I'm really happy to conduct a session along with my client. Sharad Agarwal is our Rapidmoney is our client. I know Sharad for the past 1 year. So I'm really happy, Sharad, to have you in this session.
My pleasure.
Yeah. So of course, Shweta has given a short intro about you and your company. I would like to hear from your end, Sharad. Can you give a brief about you and your company?
Sure. Okay. Rapidpay is a top fintech, especially on Kiko space, what we call it cash in, cash out. Okay. We provide micro ATM, Aadhaar enabled payment systems. Okay. So we almost serve 5 lakh outlets, what we call direct business outlets, and we are serving almost 4.5 crores customers. Okay. So whosoever, let's say, wants to transfer money through cash or through wallets, we are there. So we are top 3, including Spice Money, Pay Nearby. Okay, and we roughly have almost 2,000 employees spread it out across pan India. Okay, and now we are getting into the larger vision of digital lending, which I launched 6 months back. Okay, we launched POS business also, what we call point of sales, and of course we are coming up with a neo bank as well. So we have tying up with multiple banks for current accounts, saving accounts. Okay, of course we have insurance also. We have a wealth management platform also. So idea is that can we become a unicorn in next couple of years and leveraging our complete ecosystems. Of Rapidpay, of doing cross-selling of various products. Okay, so that's our vision. It's a very exciting time for me. Okay, in Rapidpay, and we did a lot of IT work in past 1 year, including Hubble, right? We implemented Hubble also.
Yeah.
We are proud to say that we can do SME lending within 10 minutes. Okay.
Okay, great.
We have
Nice.
achieved that. Okay.
Mm-hmm.
Yeah. The story is now we have to create a huge book. Okay, grow rapidly. We want to have a DBO 5 lakhs to 45 lakhs in
Okay.
next 5 years. Okay.
Mhm.
Current GTV is, let's say, 5,000 crore, which will go to 25,000 crore a monthly run rate.
Okay.
This kind of business. At the same time, a lot of challenges happening from a lot of regulations coming up. But
Correct.
good part is that our strategy is clear, and whatever compliance is, whatever regulations coming, we are already compliant. Okay.
Okay.
We as a company don't want to take any shortcuts. Okay. And we really want to do a good business in the right way, right spirit.
Okay, that was a great intro, Sharad. Thank you so much. And without any further delay, let's quickly jump into this session. So Sharad, so this SME lending, right? So before that, I'd like to know, can you give a brief? What is this? The sector is all about SME sector. What is the contribution to this society? Can you give a brief on that?
Yes, of course. Okay.
Yeah.
So I would say SMEs are a prime agenda for government also, right? Like we call micro SMEs, small medium enterprises, whosoever is doing a proprietorship or a self-employed. Okay, they are having small businesses, trade shops. These are all SMEs where people are targeting. Okay, there should be service industry from manufacturing, packaging, right? Okay, any grocery shops. Okay, even garment shops, right? These are very SMEs. Okay, I would say 43 million, like Shweta mentioned. We have a number in India. Segment is growing very rapidly.
Okay.
A lot of boost coming from government side.
Mm-hmm.
Okay, and of course they are contributing for credit growth in the country. They largely need a lot of credit to grow their business. Okay.
So yeah, that's the fair idea, Basharat. And and apart from that, right? So last 2 years, it's the COVID has become a huge hit, particularly this sector, right? So how did this impacted the SME sector, Sharad?
Of course, it impacted, I think, hugely, very badly when I was part of 2 years back. Especially due to lockdown, right? I would say over 90% SMEs, got impacted. Their credit cycles, go haywire, their cash flows. Of course, in lending companies, I would say, for example, I was part of Fintry at that time. Our collections reduced by almost 60%. So it was overall industry number. Okay. Because of lockdown, they were not able to get their businesses. Okay. So every company, every industry got impacted.
Right.
Okay. And even after lockdown removal, I would say they still remain impacted for next 6 months till August 2020. And a lot of SMEs they change their business model. After that, still I would say a lot of MSMEs still got impacted. They are not able to restart their businesses till now, I would say.
Okay. So I think yeah. So after seeing all these effects, after seeing all these challenges faced by SMEs, right? So what kind of remedies or what kind of actions that the government has been taken to this sector, Sharad?
Okay. No, at that time, government did a lot of work for the sector. Especially, they came back with a moratorium. I'm talking about lending perspective first. Okay, they give 6 month moratorium to these SMEs, right, so that they can restart their businesses. They can restart repaying their MIs. Okay, a lot of new schemes, launched by government like ECLG, credit guarantee schemes, right, restructuring schemes. Okay. So that there is not much impact from that perspective. And then now government has come up with the e-marketplace also for them. Okay, where they can be part of larger ecosystems. Okay, they can help in even government procurements. Okay, the complete digital ecosystems where they can improve their work efficiencies, faster turnaround of their, working capitals. Okay. A lot of tech startup boosts coming from government side. Okay. And still government continues to running those emergency credit line guarantee schemes, low repo rates, e-market linkages for those MSMEs.
Okay. So somebody is saying the voice is not able to hear properly. Shweta, Vimla, I think I can hear Sharad's voice properly. So is there any lag, Shweta, Vimla?
No. I can hear him properly.
Yeah, even I can also hear him properly. Okay, fine. We'll continue that. Amit, so you'll have to check your internet bandwidth. I'll move on to the next point. So in this particular post-pandemic, right, what are all the different types of loan products which is actually benefiting the Indian SMEs, Sharad?
Okay. A lot of new products have come up, especially on working capital loans, right? I would say product nitty-gritty remains same, especially for business loans, but a lot of flavors have changed for products in terms of their underwriting mechanisms, right? And some of the short-term products, what we call small ticket personal loans, right? Digital loans have come up for those MSMEs, right? Credit lines is quite prevalent, right? Where they can be, they can use whenever is a requirement, right?
Okay.
Yeah.
And please go ahead.
Okay. Some of the, I would say prepaid card based limit lines, right? Correct. But now government has to come back with the new rules. But still, if you're working through banks, okay, it's fine. Right?
Okay. Got it. And nowadays we are hearing a lot of jargons about fintechs and all these things, right? So buy now, pay later and all. So with respect to fintech, right? See, the one way of lending is a traditional way of lending, right? So the another way of lending is a fintech based lending using technology and all, right? So how it is basically difference between the traditional NBFCs who are giving loans versus the fintech players who are lending loans, right? So how does it different, Sharad?
Okay. Traditional lending, I would say complete physical process. Okay, where you have a balance sheet of the MSMEs. You are seeing their cash flows. You are seeing their banking, right? And important part is that you are taking physical KYCs. You are visiting those MSMEs. You are doing some verifications, right? Okay. So some of the credit policies, okay, and there's a complete physical process. There's a document flow happening through physical documents or a scanned base, right? But still dispersal or approval TAT could be 2 to 3 days, okay, in a traditional lending. And of course, there's a ticket size difference also. In traditional lending, normally it's more than 15 lakh, 20 lakhs kind of ticket size, right? Where, traditional lending happens, right?
Correct.
Okay. Fintech is where, there are a lot of MSMEs, they're new to credit customers, right? So they need 2 lakh, 3 lakh, 5 lakhs kind of loan. Okay. So their fintech came into play that why can't we digitize the complete process without compromising on the quality, okay, of underwriting bureaus, right? Okay. So there's a huge difference fintech have played in terms of processing capabilities. Okay. And right from KYC to digital KYC to digital underwriting, digital banking, digital documentations, okay, and of course auto payments also. I mean auto disbursement, okay, which fintech is coming into play, and the kind of model they have in terms of tie-up with banks, NBFCs, co-lending, onward lending, so they can easily tap a lot of MSMEs which traditional NBFC banks are not able to fulfill. Okay. Now there's a lot of push coming from those banks also. Can they also do fintech lending? Answer is yes. A lot of banks have started doing that. Okay. But still fintech, has a capability for faster processing, and for small tickets, they almost capture 30% market share.
30% market share, is it?
Yeah, on digital lending, I would say.
Okay.
With compared to NBFCs, compared to banks.
Okay. So now this entire sector, I mean, there are a lot of focus has been given to SME lending, right? So in that case, so what are the challenges when we, obviously there will be challenges, right? So what kind of challenges fintechs or NBFCs are facing while doing lending to SME sectors?
Okay. First of all, there's a complete, little bit unorganized, I would say, MSMEs in terms of their business model, their proprietorship, their partnerships, right? Their, their working capital cycles are creating challenges. So they have some delayed payment from their clients, right? Their cash flow management, there's some mismatches on that piece, right? It's creating a lot of challenges for banks and NBFCs. Okay, how do they underwrite those MSMEs, right? There's so many MSMEs that their balance sheet not good, or their business is happening on cash, right? Okay, which is getting removed now. Okay, but how? And they are very good customers from a underwriting point of view, but documentation point of view, it's not looking like, right? Okay, so that's creating a lot of underwriting capabilities or take call taking, right? How do you take a call, right? Okay, on those MSMEs is really question mark for those NBFCs, banks, right? Especially on bureau side also, I would say not many MSMEs will have a good credit history, or now they're creating history. Okay, but from a past bureau perspective, which plays a critical role.
Okay.
Yeah, and lot of companies are putting digitization efforts. Okay, so that also creates some sort of issues while having proper documentation on banking side, right? Some of the technical glitches happen on banks statements, right, for MSMEs, which create some sort of put more pressure on putting robust underwriting mechanism for banks and NBFCs.
Okay. And this particular segment, right? This SME segment. Even I spoke to yesterday. I was talking to a fintech company that they are also wanted to step into this SME lending space. Even be it a Get Advantage, Propel ID. There are so many companies are getting into this particular sector, right? So why is there any? Is there any specific reason behind it, or is it very credit hungry market, or how is it, Sharad?
One thing is that they're growing very rapidly, right?
Okay.
Now, post-pandemic, now things have improved upon, right? The economy is growing, especially in India perspective, right? Though repo rate they're increasing, but from this sector point of view, it's a lot of growth happening, and they're really credit hungry. A lot of people have, restarted their businesses, and they have now come to the same level of pre-COVID from their businesses, right? And as long as their business cycle going well, it's a good credit to give. In my experience, when the pre-COVID level, almost 98% efficiency we had on collection part. Because we were giving to those MSMEs on, let's say, some of the sectors, let's say food sector, right? Doing extremely well.
Food.
Yeah, restaurant businesses, right? Yeah, medical shops, pharmacy shops, right? They were really doing good businesses. So we really never had any challenges from collection point of view.
Okay, nice.
And if you look at a lot of ecosystems from a marketplace point of view, Amazon, Flipkart, so all these MSMEs are coming there also. There are a lot of tie-ups. So there's a lot of products coming where you can extend credit basis usage or basis transactions, right? And as long as cycle is going well and there is no pandemic kind of effect, things will really go good.
Cool.
On repayment side.
These are all the reasons, right? Okay, got it. And so next is the most important thing is on the underwriting rate. So how basically you underwrite SME sector? I mean, you can give you can have a high level answer, and then we can get into deep dive on that answers on that, Sharad.
Okay. First of all, maximum NBFCs bank they've started using technology. For underwriting of these MSMEs. Especially on banking behavior of those MSMEs, their bureau behaviors, and to do the assessment on their vintage, I would say their GST numbers, right? Their balance sheet analysis, their profit and loss analysis. Okay, so especially uh, use coming from technology, and at the same time some of the new ways coming of underwriting basis their transactions done. Okay, basis their business model, how they are behaving with any in their business models with complete ecosystems, right? They anyway doing business with a lot of players, right?
Correct.
How their business cycles, money is moving, how you can do the assessment on their stocks, okay, their uh, working capital cycles. So there are a lot of new ways coming on underwriting, especially, but use of technology is a must. Okay, otherwise it goes to manual process.
So on that, right, Sharad, so can you give a real-time use case where if this application, if it has been gone to a bank, this would have been rejected, but if it comes to us, right, Rapidpay, so we'll be able to give him a loan. So can you give some real-time examples on that, Sharad? Anything that you come in mind?
Yeah. So like I mentioned, Rapidpay have 5 lakh direct business outlets. Okay.
Okay.
So what we have done in our underwriting mechanism, we see their vintage, okay, how long they have been working with us, their transaction behavior with us, how many transactions, what kind of value transaction they are doing with us, and of course, how much income they are earning from us through, like Rapidpay is a PPI wallet, right? We have a wallet, right? So these are the products where we know our customers, we have a reach to those customers, okay, and we can easily extend credit line to those DPO. But if I go to banks, okay, or large NBFCs, so they have a slightly different model of evaluating, right? Okay, they will have a traditional model of bureau, cut-off scores, further bureau analysis, right? And of course, they would want to see a bank balance. In our case, we know a guy is doing transactions, he's earning income and he's taking income back to his account, right? But he's not maintaining a good balance, okay, in a bank account. But banks and large NBFCs, they rely on how much bank balance is there, what is average bank balance, median balance, right? Okay, so there's a difference. So,
nice. So if in that case, right? So as Rapidpay, you have these many outlets, and you have another data points that you can use it as part of fintech-based lending. But if a new age fintech company, they want to start their SME lending sectors, then it's they will also be using the same GST, bank statements, and bureau data. Is there are any other specific that they would like to focus on, Sharad? Any suggestions on?
Yeah, it depends on their business model, what kind of tie-ups they are doing, what kind of products, right? Are they into 2 lakhs kind of ticket size, 5 lakhs kind of ticket size, 10 lakhs kind of ticket size? Okay. And what is their objective? Which client or which MSME they are targeting? There are a lot of segmentation, even in MSMEs, right? So which sector they are targeting? Accordingly, they need to have a underwriting mechanism.
Okay. Based on the target customer, the underwriting mechanism will vary, right?
Yeah.
Got it. So
otherwise, standard will remain same. Like, of course, you need bank statement, right? You need bureaus, right? For your data analysis, right? In our case, we take all that information, but we don't put a hard, push. Okay, if that particular score is not that or bank is not that, we will not extend credit.
Okay. Got it. So
but,
just
But to create data, you need those kind of analysis. Okay, which creates history, and of course in top-ups. Tomorrow, after 6 months, 1 year, you want to do top-ups, cross-sell opportunities. Okay, that data helps.
Got it. So I just one housekeeping update to the audience, right? So whatever questions that you have, feel free to put it in the Q&A box. So Vimala is coordinating all these questions, and we'll take it up as and when it comes. And I can see there are questions around the government schemes and working capital loans and all. So which we'll be covering the later stage. Please stay tuned, guys. So I'm moving on to the next part, right? So you are of course you are a fintech based lending, not you don't follow the traditional ways, right? So how quickly can you disperse a loan, Sharad?
like I mentioned, we had a target of disbursing a loan in less than 10 minutes, which we achieved. Okay.
Interesting.
So in our mobile app, we have two web app, mobile apps. Okay, and there's a complete end-to-end platform of right from app download to origination system to banking bureau and disbursement. Okay, so we have also ensured that we disburse money into bank account in less than 10 minutes. Okay. So we have done within 10 minutes. Our target is, can we do it within 6 minutes, 7 minutes? Okay. But catch is that we don't have any single division process. So whatever rule engine, whatever is throwing in our scorecard engines, that is there. Okay. There is no negotiation on in terms of rate, loan amount.
Understood.
Right?
Okay. There is no negotiation. There is room for negotiation. The straight away, as soon as your rule engine approves it, then it will automatically credit. Is it?
Yeah. And we have we kept on improvising rule engine. So like 6 months back, our rejection rate were almost 40-45%. Okay. Now it's got reduced to 30-32%. Okay. Whatever leads we get, right? So idea is that how we can improvise basis, data analysis. So we have a data lake house in our system. Okay. But our day one target was that we will not have any manual process, we will not have any division process, we will not have any approval process. Everything will happen through system. That's what we chose even Hubble also. We had an API based systems where we were able to do auto dispersal through Hubble and even payment release.
Got it. And here, right, so when you say you will be able to disperse the loan less than 10 minutes, is it applicable for the private limited companies or just for individual kirana shop owners?
Individual. No, for private limited is not applicable. For sole proprietorship. Individual applicant. Yeah.
Okay. So individual small kirana shop owners, right?
Yeah.
Something like that. Okay. Got it. Okay. And so how I mean, next is a key question, right? So how technology can help lending institutions to support SME sectors? What kind of technology help is required? Right. So if you can give a brief, that will be great help, Sharad. Yeah.
Okay. In my view, today's world, end-to-end technology is available. Okay. Right from eKYCs, KYC norm, even your PAN checks, video KYCs, your lot of banking analysis, bureau analysis, deep dive bureau analysis, even digital documentations, including some of the revenue stamp papers, right? There's a lot of digital signature models available, whether the virtual Aadhaar base, OTP base, even a lot of banks are providing you APIs for data pull, for NAS registration, for repayment instruments. Okay. So there's an end-to-end open source technology available. I would say it's not much expensive also, and it's available on pay-per-use kind of model. In a SaaS model. Gone are other days or about 15 years back, when we used to have a larger capex budget for technology implementation, putting servers, putting licenses, putting storage, all that. Now it's not needed. Everything is available. For example, AWS, right? It gives you each and everything. On cloud, where you can easily configure quickly a complete app and disperse the loan. And good part is that banks, large NBFCs are also realizing now. And they completely realize they are also implementing via their digital units. So it's possible. Even in my view, some of the secured loans up to a certain ticket size can also be done with the help of technology in less than 2 days.
Okay, interesting. So in this, right, Sharad, so we have audiences across NBFCs, new age fintech companies, smaller NBFCs, right? So why would you insist them to get into digital lending process? What is the urge of getting into digital lending, right? So how important is for the lenders to digitize their SME lending sectors? Yeah.
Okay, one of the important piece of MSME, they need credit on demand, on tap. Okay. If they have a requirement of credit, they need instantly. They don't, okay. For example, they have a working capital cycles, right? They have some huge orders in place. Okay, there's some new scheme came. They need to have money for procurement of that, right? Or there are a lot of regulatory changes happening, or there's some new schemes coming, right? So they need instant money. Okay, so there is a use of digital lending. Another piece is in a small ticket size, up to 2 lakh, 3 lakhs. There are a lot of new to credit customers, right? So they need money. Okay, they are ready to use technologies. For large NBFCs, banks to extend credit quickly is a journey. Okay, they need minimum 5 days, 6 days, right?
Correct.
Okay, so there a lot of players have come up. In lending, it's not about cost of credit; it's about access to credit, how fast you can disburse, how quick you can disburse, and without too much documentation, how can you disburse? Okay, so in my view, customers are ready to pay some, higher interest rate, but they need a quick money.
Okay, got it. And see, even 2-3 weeks back, when I applied for a for Habail to one of the largest banks in India, so they're asking some 20 different types of documents, Sharad. So is it really digital lending possible? So for a private limited company, so the interactions are getting more, and they are asking collaterals and all that, right? So is it really possible to get an unsecured personal loan from an NBFC, or how is that even really possible, Sharad?
With so much documentation, I would say it will take 2 to 3 days. Okay. It depends on ticket size also, what kind of loan a guy is asking.
Right.
Okay. If you up to 5 lakhs, let's say up to 5 lakhs, 6 lakhs, salaried employee, right? He can take a loan within 2 minutes, within 10 minutes, whatever I mentioned.
Correct.
Okay. But about these large institutions, if so many documentation, especially private limited, you need a board resolution, you need both partners to be available, you need both partners KYC, signature, documentation. Okay. So there is a logical issue come. Okay. There's a technique. Okay. And some cases you need to part resolution also, right? Especially partners availability becomes an issue, and their assessment, risk assessment there. Okay. Some of the KYC where you need to do physical also in some scenarios.
Okay.
But still, what I'm saying earlier, if you used to take a 7-8 days, if you have a right process, you can still do 2 to 3 days with so much documentation. Depends which kind of segment you are targeting. If it's a more than 10 lakh, 15 lakh kind of loan, you need minimum 7 days to disburse a loan. So you need a proper underwriting, all that.
All right.
But up to more than 5 lakhs, you can still do in a digital model.
Got it. So now we are suggesting the NBFCs and fintech companies to go digital, right? So at the same time, the access to credit will be easily accessible, easily possible also. But at the same time, what is the ratio of NPA here, Sharad?
Okay, gross NPA would be. I'm not talking about pandemic scenarios. Okay. I'm talking about
post-pandemic. Yeah.
Post-pandemic, I would say gross NPA would be in the range of 10 to 12%. Okay. A net NPA would be in the range of below 5%. As an overall industry perspective.
Okay. As far as if you can let out the percentage of Rapidpay, what would be the approximate average rate?
Rapidpay, we just started within a few months back, 6 months back, and we have a small book of 25 crores. So our gross NPA is really below 1.5%.
Oh, okay.
Okay, and net NPA is below 0.5%.
Interesting. And so coming back to the government schemes, right? So on top of the RBI guidelines on one-time settlement scheme, so how can you throw light on that? How is it help the MSMEs?
Okay, first of all, the scheme is applicable whosoever is defaulting loan for 2 to 3 years. Okay, they can go back to government. They can ask for one-time settlement, but at that point of time, they need to pay something upfront. Okay, and there's a restructuring is required where they need to pay simple interest. Okay, there's a X percentage for 27 months or 30 months. Okay, and by the time their cycles improves or their business model improves, they can start paying principal also. Okay, so there are multiple scheme. So there are a lot of banks have rolled out this. Okay,
Okay.
but the key is that restructuring is possible. You need to pay something upfront, some charges, collection charges, all that you need to pay upfront.
Correct.
Okay, and it can be extended.
Okay. So and recently 2 days back we've got a news that the credit line on the RB norms on the credit line, right? The PPA license to be excluded, and also how's that's going to impact SMEs? Is it really going to impact, or is it's not? It's going to impact. How's that?
Okay. What I have seen, a government wants to remove forced credit. Okay, via this scheme, there are a lot of fintech. They are doing forced credit. Okay, especially on small ticket loans, right?
Right.
And some of the fintechs they are taking larger exposure, even not having sustainable equity or sustainable balance sheet or for example, some of the cases they extend 100% risk guarantee. They give 10 to 15% FLDG to those institutions, right? So they are taking larger exposure. This is something where government is focused about, and they want to remove that forced credit kind of issue. Okay. So impact would be to those fintechs or to those MSMEs who are their customers for that kind of ticket size. Okay. If let's say 20,000, 30,000, 50,000 loans, right? Where or a BNPL product, right? But largely BNPL normally taken by individual customers, right? Not by so many MSMEs. Okay. So from an impact point of view, for larger MSMEs, where having a turnover of 40 lakh, 50 lakhs in their balance sheet, they have a loan of 5 lakh, 10 lakh, they will not get impacted.
Okay.
But small tickets, and if they have that kind of product on a BNPL, that it will get impacted.
Okay. Got it. So, so this future rate of SME lending. So what are all the use cases that is going to be the future of SME lending in India? So can you give some interesting case studies how it's going to be different in future, Sharad?
Okay, first of all, government is doing a lot of push on MSME disbursement, and this will go up to 6 lakh crores by 2023 through journals. Okay, and a lot of fintech, they need to evolve their business models. Okay, especially need to understand MSMEs better. How do they use money? Where that money goes, right? What is their business cycle? Which segment they are catering into? And they need to evolve products around that ecosystems. Okay, so that's very important. Otherwise, you can do traditional business loans, working capital loans, BNPL. Okay, it will go in industry speed, right? Whatever is the NPAs, so if any cycle goes bad or any pandemic comes, everyone will be impacted. Okay.
Cool.
So for example, in Rapidpay, right, we are very clear that for first 2 years we will extend credit to only our direct business outlets. Because we know them better. They are doing regular business with us. Okay, and we know their activation ratios, how many transactions, what kind of transactions they are doing. Okay, and we have a control over their.
Correct.
There are 1,500 resources meeting day in day out with those customers. So we are very confident. So we are clear that we need to have a low OPEX also in that kind. There will be lesser cost of acquisition. Okay. At the same time, repayment and collection would be robust. For example, out of 25 crores, we have extended 15 crores to those are outlets, and not a single case in any DPD till now. So we have done almost 2,000 cases in last 2 months. Okay, and we are now doing a run of 10 to 15 crores on a monthly basis, and we really don't see a single customer issue on repayment of those.
Interesting. Interesting. So so we have 20 more minutes. So I've got almost some 20-30 questions in the chat option. So I just would like to address it here, Sharad. Okay.
Yeah.
So while dispersing to Kinara stores, right? How are you accessing their income? So that is one of the questions. Because when you give to loan to this small tea wala guys, right? So textile guys, small shops. So how will you? So they all deal with the cash, right? So how will you basically access their income? Is what their question.
Okay. Like I mentioned, for those kind of product, we take banking, because everyone will have a bank statement, right? They will have access to bank. They must be doing some sort of through digital bank, some sort of transaction. So we take transaction behavior. Okay, we really not too much fussy on average bank balance. So we see number of credits, number of bouncing, inward bouncing, outward bouncing. Okay, their total sales turnover. Okay, through their transaction behavior, where we do the assessment. Let's say we say there should be maximum 5 transactions in a month of credit. Okay, which is to extend credit up to 40,000, 50,000 rupees.
Okay,
right?
okay.
Yeah, okay.
Fine. So 92% of SME says that they are open to changing lenders for different or simpler digital support. So what they are saying is the retention rate is very high, very low. 92% of the SMEs are keep changing their lenders. So why it is like that? Is it actually true, or so? That is one of the question, Sharad.
Okay. This MSME segment, they need larger funds. Okay. Okay. What I have seen, organizations, NBFCs, banks, they have a policy. They, let's say, can extend up to 10 lakh, 15 lakh. But their demand is always 4 times of that, looking at their business cycle, right?
Okay.
So if you go to these kind of customer segment, they will always put file in multiple places. Okay. And they are always in demand of more money. Okay. That's what they keep on going to multiple players. Okay. And if you look at their bureau analysis, you will see they've taken 4 or 5 loans at the same time from various institutions.
Okay. So one reason could be like their demand is very high. Say for example, if I am a tea shop wala, I am eligible for 2 lakh credit, but my expectation be 5 lakh, right? That is one of the reasons. Or is there any other reasons?
5 lakhs and
so that is one of the reasons they keep changing for different lenders, is it? Okay.
Yeah.
Okay.
So they will go to every bank NBFCs for credit facility.
Okay. And
I have seen to the extent of 25, 27 institutions, 30 institutions where a good customer has taken multiple loans.
So I'm moving on to the next question. What if a new customer wants to avail working capital? How do you access that? So if a new customer is coming for a working capital loan, so how does the analysis works?
Okay, for a new customer, at least we see the vintage first. Okay, how long he's doing that particular business, whether it's 2 years, 3 years. Okay, and of course their bureau history. Okay. And there's a lot of bureau analysis we do in our case. Okay, and we start with a small amount.
So I think Sharad, the question was if he's a new to credit guy. So in that case, there won't be any bureau data, right?
Yeah, bureau data, right?
Yeah.
So especially from a vintage and their transition behavior.
Okay, got it. So can you quickly tell us what are all the list of APIs that you are using it for validating an SME? That is another question.
We have almost 56 APIs.
56 APIs, is it?
Yeah. So I was just making that list. Okay. Right from, if we want to read out, just give me a sec.
56.
I'll read out those APIs, some names. Okay. There's a eKYC, VKYC, we do face matching, we do two-way KYC, Aadhaar verification, PAN, banking, penny drop, ePDF, bureau, fraud checks. Then there's a GST validation. There's a e-sign mechanism on 3-4 models, e-stamps, e-NAST through debit card, net banking. Then there is a EPFO. There is some email notification, SMS. There's a CRM API. There's a chatbot API. There's a payment gateway. There's a dispersal payment. There's a location API. There's a telephony API. There's a documentation API. There's a LOS to LMS. We put a lot of data to loan management, of course.
Yeah.
So there's a multiple APIs Habil has provided.
Yeah.
Okay. So the list goes on.
So and that say let's focus only on the origination piece, right, Sharad?
Yeah.
For origination alone, till disbursement, right? What would be the cost per application to evaluate these APIs, right? So for every API that we need to pay money for them, right? So
Yeah.
I mean, average cost per loan application, what would you suggest?
It would be in the range of 300 to 400 rupees.
300 to 400, is it? Okay.
Yeah.
Okay. I mean, so there are certain APIs that you don't need to do if the bureau score is very less, right? So you don't need to.
Yeah.
Okay.
So I'm saying you where you're doing everything.
Everything.
Right? Yeah. For example, bureau you need to pay 30-35 rupees, right? Stamp paper you need to do 20-25 rupees per
So
case.
till disbursement, you might be spending some 300 to 400 rupees for every loan application, is it?
Yeah. Where we are using all APIs, but for all products we are not using all APIs. Okay. In some cases, it could be lesser also.
But Sharad, this is a surprise news to me because when we had a discussion with the unsecured personal loan, for that matter, right? So unsecured personal loan and digital lending NBFCs are spending till disbursement, right? The average cost would be 150 to 200 is what I heard about. But is 300 to 400, is it?
Yeah.
Sharad?
Yeah.
Okay.
So we use couple of bureaus. We use fraud checks.
Couple of bureaus, is it?
Yeah.
Okay, got it.
And because we are new state, right? It's a newly startup, right? So we are doing a lot of API. So it's a completely API based. Trust me, there's not a single manual process. Okay, including documentation, banking, stamps, right? In some cases, like I mentioned, we hit those APIs. We take data for our future analysis. But rule engine is something where we don't, applicable. Okay, but we are happy to take that cost at this point of time for our future analysis.
Understood. And question from Ankush: does the NBFC AA, right, accounts aggregator, are actually helping us in analyzing the bank statements, bank transactions and all? Is it really useful, or have you tried NBFC AA, Sharad?
No.
Not at, is it? Okay.
So what I would say, you can use that aggregators also, but still you have to do a lot of other APIs. Okay. So there is, if you want to go for larger ticket loans, right? It will really help. Okay. But at the same time, you still need to do a lot of stuff on other APIs.
Okay. Got it. So
and at the same time, it is your strategy of how many partners you want to have it. Okay, like I mentioned 56 APIs. Okay, there could be 50 partners also. There could be 5 or there could be 10 also. Right. So how many partners you want to get involved is about your strategy. Otherwise, if you involve 50 partners, somehow you will have always issues with that particular network, with that particular API. Okay, and in our case, everything is end-to-end digital. Complete API.
Okay.
So that's where we had a strategy that how many partners we want to have it. Okay. Without too much exposure on external systems.
So understood. So in that case, right? So assume that it is an hypothetical question. So you said that the cost per loan application for a complete transaction comes around, say, 300 to 400 bucks, right? So what if Rapidpay does it in a traditional way, right? So what would be the cost if it does in a traditional way? So will it be reduced or it be much higher than that?
It will be higher. Okay.
Higher, is it? Okay.
Yeah. but in a Rapidpay, we have a special case because we are targeting our own existing customers.
Correct.
Direct with this outlet. Okay, if you are going for a new customer through DSA model, right, you have to shell out 3 to 4% acquisition cost. In our case, that cost is not there.
Okay, so leave the CAC, right, customer acquisition cost. So when the application has been come to you, okay, and right now you don't have, let's assume that you don't have any lending system, origination or a servicing system with you. So what will be the cost to evaluate that? How long it will take? I mean, just a random number.
Yeah.
I mean,
okay, cost number I can't say, but it will be very high. Why I'm saying, in Rapidpay, we don't have any underwriter.
Underwriter at all?
Yeah. Okay, we don't have any. There's a risk guy with the analytics, and so there's a compliance requirement of having underwriting, which risk guy manages. But as such, there is no underwriting happens for any loan in our system. There is no operations team. Hardly a couple of guys who are working for repayments, working for collection perspective. For disbursement, there is no operations team. There is no credit team. There is no field team. Everything is API based, so our cost is reduced automatically.
Okay, so
otherwise, in traditional world, you always take minimum 6-7 days. You have to go at least 3 to 4 visits to customers to get documentation. Somehow, not a single visit you can collect all documents. You would need 3-4 meetings.
So even for one visit, the petrol cost itself goes to 100 rupees, right? So
more than that. Bombay, if you go to Bombay is far away, right? I'm giving you a scenario, right? So,
cool. Yeah. So I move on to the next question, right? So what are all the fraud check tools that you are using for these Kirana store owners? Right?
We use Sherlock, which is script-based product.
Sherlock, is it? Okay. So what it does? What is the input and what is the output, Sharad?
So there is a already feeded data in the particular database. Okay, so we do duplicate pen check, duplicate identity check, and there is a legal case check also happens. Okay, whether any fraud done by the particular customer, are there any legal cases happening with that particular customer? Okay, and there is a auto revert comes whether they approve review or a reject review.
Okay. I recently came across one more company called crimecheck.ai where we can able to see what are the legal cases that is applicable for that particular store owner.
There are various tools available.
And question from Sumir is, why is the interest rate pretty higher on loans in digital lending platform? Is there any specific reason behind it? I actually, in my experience, I really doubt that because one of the clients who are using a digital lending app, it's like the interest rate is equal to the banks only. So Sharad, from your experience, why it is higher? Any specific reason?
There are multiple criteria, right? Whether you're a newly startup, whether you have a robust book size, whether you have a good credit line from bank, ultimately depends on your cost of fund. Okay, if you have a good credit line from banks and NBFCs, you can of course extend good credit line to your customers, but especially slightly higher because of your capability to do quick underwriting and disbursement, and without proper, without so many documentations, right? Okay, so there is always, the companies, you demand credit, you can get within 2 hours, 3 hours, we do.
But Sharad, it should work in other way, right? So the cost of lending, cost per loan application has drastically come down to $300 to $400, right? If I would have done in traditional way, then the cost would have been much higher.
Like I mentioned, it depends. You're right, but for, let's say, for us, we have a tie-up model, we have a captive NBFC model. Their cost of fund is higher. We have a bare minimum 15-16% cost of fund. Okay, if you are a bank where you have a 6-7% line or cost of fund, you can do easily at 11%, 12%. So there are multiple factors around that. Your ecosystems, your maturity curve of the company, your further credit lines, given by your lenders, and of course your analysis, your quality of portfolio, all that determines your.
Makes sense.
But if you look at digital lending overall industry, right, it's slightly higher than those banks.
Oh, so that is true, is it? Higher than the. Oh, okay. And there is another question, interesting question. As an NBFC, right? how can we identify the right SME borrower? So they want to choose their right TAM, right, target segment. So I mean, can you give some suggestions on him?
Okay, from a identity point of view, important piece is coming nowadays is vintage. Okay, their business model. Okay, what kind of margin they are coming on their business models, and their rotation of money in their business cycles. It tells you the health of the particular SME, right? And there are a lot of data available through bureau analysis, which industry is good, which industry is in stress. Okay, that data is widely available, right? Via civil, via CRIF. Okay, so those are the criteria you can have, and there are a lot of geographic specific data is also available. Which area is not good, which segment is not good. Okay. Profile basis data is available, and of course bureau is anyway available.
So I'll take last two questions, Sharad. One is question from Rohit. He is asking that underwriting for each transaction is unique when it comes to property-backed mortgage or business loans, right? So business have to give some collaterals, right? There are certain scenarios. So what role can fintech play in the segment where ticket size is 50 lakhs to 10 crores? So how fintech can play in this particular role?
Like I mentioned, in a login to disbursement process, I would say 70 to 80% process remain same. As far as KYC is concerned, banking concerned, balance sheet concerned, right, bureau. So all that 70 to 80% process can be automated for all kind of products. Okay. For secure loan, let's say you need some sort of verification, you need some sort of valuation of the property. So there are technologies available for that also, but your TAT slightly increases, right? You will send the data to particular agencies, right? Or let's say you have your in-house team. Okay, so their TAT will increase by, let's say, a day. Okay. Otherwise, technology is there for all kind of products, up to 70 to 80%, I would say.
Okay. Still, you are able to automate a 70 to 80%.
Yeah,
and
for
only
example,
for the
documentation. For example, documentation or repayment instrument, right? And even some of the cases you can have both journeys. Let's say there's an applicant, there's a co-applicant. Okay, so your time will slightly increase. Okay, but technology is there to support both applicant, co-applicant, and having those APIs based processes.
Understood. So I got another question. So how do you mitigate? I mean, so the willful defaulters are there, right? So how will you mitigate the risk of intentional defaulters or skip customers in fintech, like in the unsecured space?
Yeah, that is a
how will you identify the willful defaulters? It is $1 million question, by the way. So Sharad, yeah.
Okay, what I have seen. Our experience in few cases, we have seen skip customers. Okay. And nitty-gritty is that very good customers on documentation, very good profile, very good analysis on bureau, everything, very tech-savvy customers. Okay, especially from South location, Bangalore. Okay, and they had an intention issue. And we even could find out. Okay, especially we had multiple addresses, their bank address, and what we have come to know that they have now defaulted in banks also. So they took money from 5-6 institutions at the same time. Same time or same month. Okay, and they're defaulting. So one thing is that in some of the policy changes we can do. Okay, within the same month, if a customer is applying to multiple institutions, okay, can we upfront know their behavior?
You have to think twice, right? So is there any other pattern? See, one is that you said that a customer is applying multiple times to multiple inquiries that we can take it from the credit report, right?
Yeah.
So is there any other patterns that you can identify? Hey, don't go behind these guys. We can easily find out this could be the reason for a willful defaulters. Can you see some kind of a pattern before, Sharad?
Not much I've seen in our current company. In some cases, I can give one more pattern. Okay, now we do also two-way KYC. Okay, where customers is in front of a particular technology app and you can interact. Okay, so you can whatever questions you ask from customers, some of the cases you can analyze this customer may default. Basis answer of those questions. Okay, for example, in some customers in remote area, somebody is helping to fulfill the particular process. Okay. However, customer is not really very tech savvy. That you can some sort of you can analyze, but not on a large scale. If you're doing a large scale business, it's very difficult. Okay.
Cool. Interesting. And last question, Sharad, like, what is the advice to young entrepreneurs who's entering into or an aspiring into entrepreneurs like to be in the fintech space, right? So your advice on them, Sharad?
Yeah, I would say you have to be clear on your objective. Okay, what area you are targeting, what segment you are targeting, what kind of problems you are addressing of any segment is very important to know. Okay, and a lot of brainstorming needs to be done by those young entrepreneurs. Okay, if really they want to scale the business, otherwise lot of traditional, lot of same fintechs are available. Everyone is doing multiple business, same products. It's a function of capital now. How much capital you have, what kind of leverage you have, and what kind of portfolio quality you have. Keep on doing business, right? Okay, but it's very important for young entrepreneurs if you are entering in fintech space at this time. To identify your segment, your business model, your profitability of business model is important, not revenue. I would say now every VC they are looking profitability.
Correct. Instead of valuation, they are looking for profitability. Yeah. Agree.
So it's important to define that after thorough brainstorming.
Perfect.
Otherwise, technology is available for everyone. Okay, and anybody can start business in a tie-ups.
True. Thank you so much, Sharad. I'm just handing over to Shweta for a final note.
My
Shweta,
pleasure.
you there?
Yeah. Thank you, Mani. Can you hear me?
Yeah.
So I hope everybody, the attendees, enjoyed the session, and I hope that we could cover all your questions with Sharad sir. And before ending the webinar, I would like to give a huge thanks to Mr. Sharad Agarwal for imparting us with the immense knowledge. Then I would like to thank the participants and the Habile team for making this session possible. And thank you once again, everyone. And I hope you enjoyed the session and you have a great evening. Thank you so much.
Thank you.
Thanks, Shweta. Thanks
for giving me this opportunity, Mani.
Pleasure talking to you, Sharad. Thank you so much. Yeah.
Thank you.
Bye.